This is Jordan. This is your weekly outlook video for gold and silver and the mining stocks. This video is being recorded on Monday, January 15th, 2024. Hope you all are having a great holiday. And let's get right to the video. So starting off with gold and silver here, we have daily bar charts. Gold here, silver down here. Gold with the 200-day here, 400-day moving average here. Silver, this is the 200-day moving average here. And so looking at gold, we're basically in, it looks like a range-bound market from, the low over the last 2 months or so, from 2,000 to 2,100. So you had the peak here, that huge intraday move on Sunday night or early Monday morning, left a nasty candle here. So 2,100, you had the quick sell-off. Then you had the rally back to 2,100. Sell-off again last week, a little oversold, and then it ended last week with a good move, a gain of about 33 bucks. Although there is a bit of, not a bit, but there is a gap here, I believe. So looking at support, there is support here at, call it 2020, and then resistance at 2,100. So gold, right at, if we round up here, 2052. So gold is in between this area, and so there's many possibilities. I mean, it could go like this. I mean, it could go like that. It could go like that. So many possibilities. It's not clear to me yet which way it's going to move, although generally we could say, so far this is holding up well, and you'd probably expect it to break above 2,100 at some point over the next couple months. But again, here and now, we're in a range, and it's just kind of boring. There's nothing, that exciting I can say. Silver has underperformed gold since the peak. I mean, because gold was able to rally back to 2,100. Now it's in between, whereas this is silver's rally. Couldn't even get back to 25, sold off. So before the really good gain on Friday, it was down here. It even made a lower low. So, and I think I noted this in the last video, gold is really outperforming silver. Now, in addition to that, I'm going to do another video showing how the steepening in the yield curve has started to steepen. And yet, yes, today's a holiday, but I think the difference between the 10-year and the 2-year yield is minus 0.18. So that's getting really close to zero. So if that steepens to above zero, and it does so in a vertical fashion, that is a strong recession indicator. So that's something we have to watch for. Again, I'll talk about that in another video. Like a real vertical steepening above zero, that's significant. I mean, if it meanders around zero, that's not really a recession signal. But if you get that vertical steepening, and you get the gold-silver ratio, gold really continuing to strongly outperform silver, like if that ratio continues to rise, I should have put that down here, but that could also be another recession signal when considering what's going on at the yield curve at the same time. So I know I'm getting away from the charts here, but that's kind of the macro market thinking is, I mean, it's not, we're not saying that that's imminent, but you have to be on the watch for that over the next couple months, because if you get those types of signals that a recession is coming, then you know that rate cuts are going to be imminent. Gold's going to surge above 2,100. Yes, gold is outperforming silver in that environment, so maybe silver at some point it falls down here, but then when the rate cuts come and gold is already broken above 2,100, maybe that pulls silver back this way. So getting ahead of myself, but that's potential reality over the next, who knows, it could be 1 or 2 months, maybe it's 4 or 5 or 6 months. Looking at the miners, a couple weeks ago I liked how things were setting up. Last week, I mean, these are weekly bar charts. This is a bullish hammer, so you have a bullish hammer in all these cases. It's good. I mean, as long as we're holding above this, the December low, as long as we're holding above that, then you could say the medium-term bias for the miners is probably higher. I don't like that. The sell-off came below the moving average. I mean, we're getting, we're picking nits here, but I don't. It would have been nicer if, or not nicer. It would have been more bullish if the miners would have held above the moving average, and you kind of see action like that. That's more bullish. It's more predictable. But the question over the next couple weeks is if we can see miners, break above this level. Like, can we see, or not break above? Can GDX rally back to 32? Can GDXJ rally back to 39? If they can in the next month, I mean, that would be a good sign. There's more pressure building that they can, make this move here. I talked about it, excuse me, I think 3 weeks ago or so. The setup here, it does. I mean, it is shaping up bullish, and so what I'd really like to see is you get the yield curve. It steepens. You get this vertical rise above zero. The 2-year yield really starts plunging, where rate cuts are moved much closer to us. You get that. That's going to potentially give some fuel for the miners to make that move that I was talking about. This type of move. So I'm just thinking out loud here. This week, given that we have the bullish hammers, it's a short week because of the holiday. My bias would probably be to the upside because we're coming off these bullish hammers. Maybe nothing spectacular, but we'll see. So that's all for the video. I know only 2 charts, a lot of talking here about possibilities and scenarios, but that's kind of where we are. Let me know what you think in the comments, and I'll talk to you guys again in the next video.